Hi, Greg Dorsey here. It's Monday, September 20th at Leeb.com, Leeb.com. Well, it's official now. The National Bureau of Economic Research, the group tasked with dating the beginning and end points of business cycles, declared today that the recession officially ended June of 2009. To that we say, while the NBER may technically be correct, the recovery since that point has been unlike any America has ever seen. And it's been so anemic that there's really little difference between the recovery and a typical recession. Moreover, enough weak economic data has been released in recent months to suggest that a year from now, the NBER may again be late to the party in declaring that the economy is once again in recession as of September 2010. Time will tell. For now, though, the NBER announcement helped to power the stock market sharply higher on the day, having pierced through important overhead resistance in the 1130 area on the S&P. Momentum players bid shares much higher. The next important test comes not far above where we are now, at 1150 on the S&P. We certainly like to see stock prices rising. And there's without doubt a good deal of pessimism out there right now to support further gains in the major averages from a contrary perspective before a reversal sets in. But the tone of this rally leaves a lot to be desired. For a sustainable rally, we really would like to see a big improvement in the situation for consumers. We're certainly not getting that in the housing market. The National Association of Home Builders came out with their latest housing market index today. It's a monthly index. While unchanged from last month, the index came in below expectations and is 31.6% below where it was a year ago, and considerably lower still than the highs it set this past spring. Now, Chris Whalen over at the Institutional Risk Analytics, whom we greatly admire, put out a note today that pointed out that colleagues of his in the asset-backed security industry, particularly in the world of loan servicing and structured finance, believe that we're only about a quarter of the way through the total body of bad loans and foreclosed properties here in the United States. Another smart fellow whom we regularly read is economist David Rosenberg, who pointed out today that Friday's reading on the University of Michigan's Consumer Sentiment Report at 66.6 is still 24 points below what is consistent with an economic expansion and 7 points below the typical readings during actual recessions. So the NBER can say what it wants. Consumers think otherwise, and they vote with their pocketbooks. Let's see what the Federal Reserve has to say on the subject at the Federal Open Market Committee wraps up a one-day meeting tomorrow afternoon. Chances are they won't do anything, but we could well see them embark on another round of quantitative easing after the November elections. We'll see. That's all for now. Thanks for stopping by, and stop by again soon.